Market is on the move. We've got a position that's over 20 pips in the money. So what we're going to do on this guy that's 23, we're going to put a trailing stop on him. And I'm going to trail the market by 10 pips. So just like in the last video, if it comes back and hits it, we're going to sell 3,000 units and then put a bracket order on the buy side. But the fun or hope, the goal would be for the market to carry on its way and this trailing stop to just keep moving up like what it's doing right now. Look, every time it moves, we're just picking up some action. All right, we're starting to see our little bit of our pullback. This guy's now about a pip away from triggering that stop order. So if it does, then we're going to bank a little scalper and then we'll put this position up above for a pullback. But see if we can't squeeze it just a little. If it hits, maybe it's just pulling back and it's going to, carry on its way. Ooh, we're going to hit it. There it is. Okay, so we've taken out our trailing stop. So we've got that 4,289 units. We're now off balance. We're not going to trim on this one because we didn't get a full 30 pips of profit to apply. So I'm just going to put a buy stop order for 42.89. And that's going to be about 30 pips from the market. So that'll be our buy stop. So what we're hoping to do is to squeeze that guy down just a little bit and probably capture some of the pullback the other way. We're getting a little bit of a pullback. And so I've got this buy stop up here at 42.89 and we're squeezing it. I'm going to put a buy limit order down here. This would be 10 pips below where I sold it. And we're going to put that for 42.89 for a buy limit. So what that would do is if this came back down and hit it, we would have made 10 pips coming back the other direction of clean pips. So kind of a little bracket order in there. If it hits this guy, perfect. We're back in. We're getting the big pullback now. Look at that. We're 2 pips away from that buy limit order. So we've got a chance of that guy sneaking down. Made a little on the way up, and now we're making a little on the way down. It's just a game of chess, isn't it? Let's see what this does here. Come on, big boy. Just sneak down there and finish off for us. Oh, there it is. At that exact moment, it just flushed off. So first order of business, we're going to cancel this buy stop order. So he's no longer a part of the game. And we're back to a balanced hedge of 42.89 and 58.01. So what we did is we caught 20 pips going up and then we caught 10 pips coming down. We didn't trim because I wanted to have a bigger trim. I like to get like that 30 pips with the trailing stop. We didn't quite get there. So what we're going to do is we're going to bank that profit and we'll use it for a heavier trim somewhere down the road if we need to. There was actually a question yesterday in the comments that kind of referenced that. So if you don't feel like you've captured enough money on that position to trim somewhere else, make the profit, close out the position, rebalance your hedge. But just remember, you've got a little bit of cash for down the road to use. When it was all said and done, this is what we ended up with. We had this position that we were able to take up, close out a profit, catch the pullback, as you saw. Now, once it came back and caught that 10 pip pullback, it did continue down another, 16 pips is where it's out of the money right now, which is fine because I picked up some money on the way up and then I was able to pick up some clean pips on the way back down. And in my opinion, you kind of work at like 10 pips at a time. If you can get 10 pips here, clean pips there, clean pips here, those eventually add up to be a lot of pips at the end of the road. So I don't really feel bad that this ended up back in the market, even though hindsight, which is always 20/20 and easy to predict. And if we could predict the future like we can see the past, we wouldn't be hedging or probably trading. We would be just buying the lottery tickets and making tons of money. But it did continue to pull off and sell off. So that's fine. We're not too far away from our short position. We're not too far away from our long position. And we also have 2,400 units on the sidelines that we can pop in and trade somewhere. We also have a little bit of cash from today's trade that we could do a micro trim somewhere and just add to this bucket along the way if we were able to see something that we just really liked. All right, let's pop into the comment section, see what's happening out in the big world. One guy wrote, "Thanks for the great content." Man, thank you. How did you get the 30 pips for the hedge, stop, buy, sell, and 40 pips takeoff? I'm asking to see if for another pair like Aussie US, another calculation would be better. I would say yes. This is probably my interpretation of the CAD and probably the Euro. I think the Aussie US probably moves in a lot different speeds, so I would just play with that to where you kind of make a profit target that you want while also giving you some extra capital to trim down somewhere else in your hedge. One guy wrote, "I have a question, but let me preface to say I'm not asking you for financial advice or to do my thinking for me, only because you value our opinion and experience." So for sure, no financial advice. I want to reiterate that. So let's see what the question is. Is a good rule of thumb that if trading at capacity, having 150 to 200 pips of margin a good rule of thumb? I'm currently running a live account back testing, and I'm noticing that the capacity for me is just under half of my margin. Example would be 10K is 5 lots, 5K, 2.5 lots. Again, I'm only asking for your opinion. Okay, in my humble opinion, if you had 10K, I would trade 1 lot. If you had 5K, I would trade a half a lot. That's just my opinion. I think it takes several positions potentially to be out 150, 200, 300 pips. And if you get that too tight, you're going to put yourself in a corner that will be uncomfortable and hard to get out of. Now, if you get good at running your hedge, and I think everyone can, then I think you can increase that and potentially get to where you're doing, instead of 1 lot with 10K, maybe your 1.5 to 2 lots. I personally think 5 lots for 10K is too aggressive. One person wrote, "Do you use the 30/40 for Euro USD, GBP USD, and USD CAD when you back tested from 2017 for 3 times? Kindly reply." I think so. I think I was doing the 30/40 ish or something along those lines. I think I want to be clear, you can have that be whatever you want it to be. If you get too low and you don't let a position work, you don't end up with enough profits to trim somewhere else in the hedge. But if you're willing to let it work a little bit, you can end up with some more profits to apply and make some type of dent somewhere in the hedge. So I've always kind of gone 30/40 for a while. I did like the 20/40. I kind of find myself more back on a 30/40, but like you saw today, I like to run a trailing stop. That way, if a position does get working into the money, I don't completely sit on the sidelines. If it pulls back off, like what it did today, I can still make a scalp, have it come back down, and basically almost reset the position where I started. So for whatever that's worth. One person wrote, "Are you 90% of the time in drawdown?" Dude, I'm 100%, man. Drawdown is where the money is made.